Stamp duty. What do you need to know? What about land? What about hotels? What about commercial conversions? What about when you change from non-residential to residential? How does stamp duty work? Hi, I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Stamp duty is a very big topic and it's a very simple process, or it can be quite complicated. So today I thought we would look at a few specific different topic questions to help just expand your stamp duty knowledge and give you an idea on what some of these aspects are all about. So the first question I'm going to throw out there is a plot of land a residential for stamp duty purposes? And you may think, what is the big difference here? Well, the big key difference is the stamp duty rates are going to be significantly different if the land is treated as residential or non-residential for stamp duty purposes, because our rates will start at 5% for residential and they'll start at 2% for commercial or non-residential. Now obviously if it truly is a plot of land, so it is just land, there is no dwelling, there is no buildings on this plot of land, and it is a very specific plot of land for developing. So this is going to be on the non-residential rates. The first 150,000 is at 0%, then it goes to 2% for the next 100,000, and then it goes up to 5%. So that's quite low stamp duty rates that you're going to be paying. However, if you are buying a plot of land that is part of a dwelling, so it's maybe a garden plot, it's part of a dwelling, you're potentially also getting the house as well, then even though you're buying a plot of land, this may actually be covered by the residential stamp duty rates, which would mean the cost of that has obviously just suddenly increased. Now this is a specific section of the Stamp Duty Act that specifically states that land that is or forms part of a garden or grounds of a residential property is treated as residential property. This means that even though it may be sold off separately from the dwelling, it is part of the dwelling and its gardens or grounds, which therefore means the residential stamp duty rates are going to apply. This means that the rate is going to start at the 5% for the first 125,000. Depending on when you buy it, it's either going to be 5% or 7% from 125 up to 250, and then after 250 you're up to 10% and increasing rates. So it could be quite important to note the difference between what stamp duty rate you're going to buy. So if you're buying land that is part of a house, you're buying off a garden, the stamp duty is going to be higher than if you just buy a plot of land that's in the middle of nowhere that has no dwellings and has no connected properties to it. So the next question we're going to throw out there is a hotel residential property or is it non-residential property? And this one is relatively straight, that this is treated as non-residential property as a hotel is not seen as a dwelling, which means it's not residential, so we're on the commercial stamp duty rates of 0% for the first 150, then 2% and then 5% after 250,000. Now it says specifically here in the guidance that this is hotels, inns or similar establishments. So what about bed and breakfast and guest houses? And there has been a very specific point where HMRC have said cases involving bed and breakfast establishments or guest houses will be treated on their own merits. However, a B&B establishment which has bathing facilities, telephone lines installed in each room and is available all year round would be considered non-residential, in line with a section 116(3)(f), which states that a hotel or inn or similar establishment is not used as a dwelling. So as we can see, if it is properly a bed and breakfast, they've set it up so that it is very much a bed and breakfast. It's not a house which they use as a bed and breakfast, but it's not really, it could be a house. then that sort of property is not going to get the non-residential stamp duty rates, whereas something that is properly set up as a bed and breakfast is going to be at non-residential rates, whatever you are going to decide to do with it afterwards. So it may be something that, if you're looking at those sorts of projects, is useful to know, because you may just need to make sure that when you're buying it, you know exactly which part of the stamp duty rules you're going to be falling under, because it will be a very big difference on stamp duty if you get it wrong. Moving on to, what stamp duty do you pay if you're buying an office for conversion to residential property? And the key thing here is, if you're buying it to do the conversion, you're going to be at the non-residential rate. So you're going to be at the 0%, 2%, 5% rates for purchasing that office non-residential building. The key change is when you are selling that property, when you've done the commercial conversion, you are going to be selling at the higher stamp duty rates of the residential rates. So you, as the purchaser of the building to do the conversion, is at the non-residential rates. When you sell it, the person buying off you is going to be at the residential rates. So probably just something to be aware of, because it may have an impact on the GDV of the project, or what you're going to be selling for, depending on what type of person you're looking to sell it to. If it's an investor, then it may be expensive for them to be buying the flats or properties with the stamp duty at the residential rate. It may be you're selling to the general public who are looking to buy the property for themselves, so they're not going to be paying that additional rates of stamp duty. So this may just have an impact on what you're looking at doing. Or the other alternative is, when you come to sell the project, if it is to an investor, if you have it set up in its own property project company, then potentially you can sell the company instead of the individual properties or flats, or however you've done your conversion of the property. So there's a few options there, but just so you know the stamp duty position, hopefully that gives you an idea of how it fits together. Our final question that I'm going to pose on today's video is, can you reclaim stamp duty if you paid stamp duty on a residential property that is later found to be non-residential? And the answer to this is yes, which is always good. So if you have overpaid stamp duty, you can reclaim it. The key thing here is there are deadlines. The refund has to be claimed within 12 months of the property purchase completion, using what is known as an amendment to a stamp duty return. This will then reclassify the property as non-residential, which will enable the refund to be claimed. The thing to note here is that HMRC is very likely to open a case to check that this is the correct position. So you do need to make sure you've got your evidence and you can back up whatever you are claiming. This will be to check that on the date that you acquired the property, that it was actually treated as non-residential, and it's not that you've made it non-residential since you purchased the property. So you just need to make sure you've got your evidence of what it was at the point of purchase, with any evidence potentially of all the sales literature or purchase literature that you had, so that you've got any evidence to provide that evidence and proof to HMRC for any investigation they open up, to just clarify that that is the correct position for the property. As you can see, there's lots of quirky things with stamp duty and lots of different quirks to know about. If there are any questions that you specifically have, then please do post a comment and we can have a look at doing a further video with more stamp duty quirks and useful tips. Hopefully today you found some extra information about stamp duty and some of the quirky areas and how it fits together. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel. And let's make tax less taxing.